Trump threatens to regain the U.S. control of Panama Canal over excessive fees. Christine Lagarde says the Eurozone is very close to reaching the 2% inflation target. And Britain's economy shows zero growth in the July to September period. Hello, good evening and welcome to the Economic Bulletin, where we present comprehensive coverage and expert insights on the latest economic trends and developments. First of all, the Biden administration has announced a trade investigation into Chinese-made legacy semiconductors, which could lead to additional U.S. tariffs on chips that power everyday products like cars, washing machines, and telecom equipment. The probe, launched just weeks before President-elect Trump takes office, targets China's state-backed semiconductor industry and its impact on U.S. competition. The investigation could affect critical sectors like defense, automotive, and medical devices. Biden's 50% tariff on Chinese semiconductors starts in January, and the probe may escalate trade tensions, especially as China plans to dominate legacy chip production in the coming years. Meanwhile, President-elect Donald Trump has threatened to regain U.S. control of the Panama Canal, accusing Panama of charging excessive fees for its use. Speaking to supporters in Arizona, Trump expressed concerns over potential Chinese influence on the canal, although China does not control it. A Hong Kong-based subsidiary manages two ports at the canal's entrances. Trump's remarks, made both at a rally and on social media, signal a rare instance of a U.S. leader demanding territorial control from a sovereign nation. The U.S. previously administered the canal before its return to Panama in 1999. In response, Panamanian President Jose Raul Mulino has reiterated the country's sovereignty over the Panama Canal, following threats from the U.S. President-elect Donald Trump to retake control. Mulino declared that the canal and surrounding areas are non-negotiable and firmly belong to Panama. He also defended the passage fees, stating they were not arbitrary. Trump's remarks, made during a rally in Arizona, criticized Panama's charges and warned against potential Chinese influence on the canal.
U.S. President-elect Donald Trump has demanded that Panama reduce what he called exorbitant fees for using the Panama Canal or face pressure for its return to U.S. control. Addressing supporters in Arizona, Trump criticized the charges imposed on American shipping and naval vessels, calling them ridiculous and highly unfair. Panama's President Jose Raul Mulino swiftly rejected Trump's remarks, emphasizing that the canal and surrounding territory are sovereign Panamanian assets. He stated, "Our independence is non-negotiable." The Panama Canal, a vital 51-mile link between the Atlantic and Pacific Oceans, has been under Panamanian control since 1999, following decades of joint administration with the United States. It handles over 14,000 vessels annually, making it critical for global trade. Trump's comments mark a rare instance of a U.S. leader suggesting the possibility of reclaiming foreign-controlled territory, signaling a potentially contentious shift in U.S.-Panama relations. Trump also posted online calling the canal a vital national asset for the U.S. and insisting that fees must be lowered to support American interests. While Molino expressed hope for a good and respectful relationship with the incoming administration, Trump's social media response hinted at ongoing tensions, writing, "We'll see about that."
Now, joining us from Washington and to discuss this is economist Peter Qnews. Thank you very much for joining us here on Qnews. So how do you assess and what do you make of these comments by Trump about reclaiming control of the canal?
Well, I mean, Trump makes an outrageous statement, big surprise. But let's look at it from both points of view. The United States gave up the Panama Canal under the Carter administration in 1999 and pretty much got nothing for it. So that was a controversial move. But that was a long time ago. The idea that Trump could reclaim the canal, I mean, how would he do that? By force? By sending the army down there and taking it over? That's not very likely. So basically, we're setting up for another contentious negotiation.
And where has this come from? It seems to have come out of the blue, really. And what does it mean for U.S.-Panama relations?
Yeah, where it comes from is that the fees for the use of the Panama Canal have gone up considerably. But then again, Panama spent $5 billion enlarging the canal to accommodate the newer, larger ships, which was a necessary expense. And now it's trying to recoup some of the cost by increasing the fees. What it means for U.S.-Panama relations is always interesting. Remember, Trump is not viewed as entirely rational by most foreign leaders. So he is viewed as somebody who's capable of doing crazy things. And this gives him a terrific negotiating advantage because people think, it may not be rational what he's requesting, but he's probably crazy enough to do it. So we're basically setting up a negotiating strategy.
And are there any legal bases for the U.S. to do this, to demand control? And would you have any international support for this?
No, there's no legal basis whatsoever for doing it. You can argue that it was a mistake to give it back to Panama in the first place. You could argue that, but it's a little too late for that argument. There's no legal basis for doing it, and I can't imagine any support for trying to recoup the canal by force. Let me tell you what I think the most likely outcome is. Trump will get a modest fee reduction and claim a huge victory if, in fact, he pursues this at all, if he doesn't get distracted by some other obviously more important events facing the United States when he takes office on January 20th.
And what outcomes and what challenges might Panama face if it decides not to lower the fees? Is there anything that Trump can do?
Yeah, I mean, here again, you've got to worry that he does something irrational. And that is one of the things that the president of Panama and his administration will have to take into consideration. I mean, from a negotiating point of view, it would be better to give him a small victory by allowing a small reduction in rates that wouldn't hurt Panama that much, but would give Trump something to brag about in terms of a diplomatic victory. And then in that case, pretty much everybody would be happy.
And is this about China? What role does China play in the Panama Canal? And are the concerns about its growing influence there justified at all?
The United States is the #1 user of the Panama Canal. China is the second largest user of the Panama Canal. In addition, China has made considerable inroads into many countries in Central and South America. So there are concerns about China's influence. For example, China makes the cranes that are used to load and unload cargo off of the ships. So China does have considerable influence on activities in that region, not only in Panama, but in other countries in the area. So China clearly has an interest here.
And how exactly do the current canal fees affect U.S. trade? Is it a big problem?
The Panama Canal accounts for roughly 4% of all international trade. Is it a major budget item? Is it a major cost factor? No. Would a reduction in those transit fees be welcome? Yes, of course they would, but it's not likely that it's going to be a very major reduction for the reasons we discussed before.
And do you think, it's often said that Trump listens to the last person he spoke to. Do you think someone's talking in his ear and this is where it's come from?
Yeah, and I don't know for sure, but you're probably right. It is possible. And a lot of other people are going to be talking to him about, frankly, a lot more important matters in coming days and weeks. So this may be the first and last time we talk about this together. We'll have to see.
Well, thank you very much. Always good to talk to you, Mr. Peter Tanous. Thank you very much for joining us here on Q News. Now let's move on to the latest developments from around the rest of the world. Now, Christine Lagarde, the president of the European Central Bank, said the Eurozone is very close to reaching the central bank's 2% medium-term inflation target. Lagarde noted that if inflation continues to ease, interest rates could be further reduced. However, she highlighted the persistence of services inflation, which remains at 3.9%, still hovering near 4%. Lagarde also opposed retaliatory trade measures against incoming US President Donald Trump's tariff threats, calling such actions detrimental to the global economy. According to a Bloomberg survey, Eurozone growth is now expected to be 1% in 2025. That's down from 1.2%, with 2026 growth revised to 1.2% from 1.4%. Germany's forecast has been downgraded to 0.4% growth in 2025, while Spain is expected to grow slightly faster. The European Central Bank remains more optimistic, expecting recovery from rising incomes and stable inflation, though consumption may take longer to recover. Inflation is forecast to reach 2% by mid-2025, with core inflation falling quicker. S&P Global Ratings forecast the Eurozone economy will grow 0.8% in 2024, while increasing to 1.2% in 2025, with Spain leading the growth. However, Germany's underperformance may limit overall gains. Inflation is expected to ease slightly to 2.4%, driven by falling energy prices. Geopolitical and economic risks persist, with potential shifts in defense spending and tariffs under new leadership in the European Union, United States, and in Germany. Spain's National Statistics Institute has announced that the country's gross domestic product grew 0.8% in the third quarter of 2024. The institute added that Spain's third quarter economic output expanded 3.3% on an annual basis, marking a downwards revision from the preliminary reading of 3.4%. Meanwhile, Britain's economy failed to grow in the July to September period, with the Office for National Statistics revising GDP growth down to 0% from 0.1%. Growth in the second quarter was also downgraded to 0.4%. Prime Minister Keir Starmer's government, in power since July, faces challenges, with tax hikes for business causing concern. The Bank of England forecasts no growth in quarter four, and analysts predict a better outlook for 2025. Lloyds Bank Business Barometer has revealed that British business confidence fell to 39% in December, its lowest level in 2024. The decline was driven by the trading prospects of companies, although there was more optimism about the wider economy. Despite this dip, hiring and pay showed signs of recovery, with a 2.3% rise in job vacancies in November, driven by the logistics sector. Average salaries rose by 6.5% year on year, marking the largest increase since April 2021. Analysts warn, however, that employment trends may soon reflect the impact of the new government's budget and broader economic slowdown. Germany's statistics office reported that import prices grew by 0.6% year on year in November 2024, an improvement from negative 0.8% in October and negative 1.3% in September. Import prices also rose by 0.9% compared to October 2024. Export prices in November 2024 were 1.2% higher than the previous year, following a modest rise of 0.6% in October and 0.4% in September. Statistics Canada has reported that the country's economy showed signs of slowing down towards the end of the year, with a 0.1% contraction in November, marking the first monthly decline in 2024. This follows a 0.3% growth in October, driven by gains in oil and gas extraction and manufacturing. Despite this, analysts had expected a 0.2% rise in October. The Bank of Canada had previously forecasted stronger growth, but the latest data suggests that the economy may fall short of the central bank 2% growth projection for quarter four. To combat slower growth, the central bank slashed its policy rate by 50 basis points to 3.25% in December, with further cuts expected in 2025. Singapore's core inflation rose 1.9% year on year in November, the smallest increase in nearly 3 years, below economists' forecast of 2.1%. Headline inflation was 1.6% lower than the expected 1.8%. Slowing inflation gives room for the central bank to ease policy, though analysts suggest any change may come later in 2025 due to potential US policy impacts. The Monetary Authority of Singapore has kept policy unchanged since October 2022. Singapore's GDP growth forecast for 2024 was raised to 3.5% after stronger than expected third quarter growth. Moody's upgraded Sri Lanka's long-term foreign currency issuer rating to CAA1, that's CAA1 from CA, with a stable outlook following the approval of a $12.55 billion debt overhaul by the country's creditors. The rating upgrade reflects a reduction in external vulnerability and government liquidity risk, alongside prospects for fiscal and debt sustainability. Sri Lanka had defaulted on its foreign debt in May 2022 due to high debt levels and declining foreign reserves. South Korea plans to issue its won-denominated foreign exchange stabilization debt in more than 2 decades, with sales set to begin on January 24, 2025. The government intends to raise up to 20 trillion won in 2025, with monthly issuances of 1 to 2 trillion won each. The move aims to combat currency market volatility and strengthen the country's foreign exchange equalization fund. The issuance, delayed earlier this year due to law revisions, is unrelated to recent won weakness. Honda and Nissan have agreed to enter formal merger talks over the next 6 months, a move that could create the world's third largest automaker. Mitsubishi will also join the discussions. This move comes as both companies face growing competition from Chinese car makers and the shift to electric vehicles. Nissan, struggling with financial losses and a 94% profit drop, is in desperate need of a larger partner. Analysts suggest that this merger could spark further consolidation in the industry as automakers seek to cut costs and increase scale. So to the MENA region, and the Suez Canal economic zone has signed an $8.8 million project with Turkey's Denim Rise for a ready-made garments facility. The project, covering 26,000 square meters, will create 1,000 jobs and aims to export 70% of its production. The project is set to open in the second half of 2025, and it will be located in the strategic Kantara West industrial zone. Kuwait's Central Statistics Bureau reported a 2.36% annual rise in the country's inflation for November. The Consumer Price Index stood at 134.6, reflecting a 0.15% increase from November. This increase was attributed to higher prices in categories such as food and beverages, clothing, home furnishings, health and education. Notably, transportation costs fell by 1.89% year-on-year. The Food and Beverage Index saw a 4.66% annual increase, with a 0.59% rise compared to October. The Kremlin has described the situation regarding European countries purchasing Russian gas as very complicated, following talks between President Putin and the Slovak Prime Minister Robert Fico. The discussions covered bilateral relations and the conflict with Ukraine. Fico confirmed that Putin was willing to continue supplying gas to Slovakia, despite challenges arising from the expiration of a gas transit agreement between Russia and Ukraine at the end of the year. Ukraine has refused to renew the deal unless Russia is not paid for the gas until the conflict concludes. Oil prices stabilized on Monday after losses last week, as lower than expected US inflation data offset investors' concerns about a supply surplus next year. Brent futures fell 0.52% to $72.56 a barrel, while US West Texas Intermediate crude edged down 0.49% to $69.12 a barrel. Meanwhile, gold prices edged lower in a subdued holiday season trading on Monday, weighed down by a robust dollar and high US Treasury yields as investors awaited clearer signals on the Federal Reserve's monetary policy for 2025. Spot gold was down 0.3% to $2,612.58 per ounce, and US gold futures eased 0.7% at $2,627.60. And that's all for now, but here's a roundup of today's key economic headlines. Trump threatens to regain the US control of the Panama Canal over excessive fees. Christine Lagarde says the Eurozone is very close to reaching the 2% inflation target. And Britain's economy shows zero growth in the July to September period. And that's all for today's Economic Bulletin here on Qnews. Stay connected with us for more news and more updates.